Hi there, I'm Tyler Bollhorn from Tradescores.com. We are logged into Tradescores. I am on the Alerts and Analysis page, which is a page for subscribers to the newsletter that I publish. And with this newsletter, you also get real-time trade alerts. So when I find a trading opportunity, I email that out or send it out by text message to cell phones. For those of you that are already subscribers, you may not be aware of this page, but there's a lot of information on here. You go into Alerts and Analysis, and then once you're in there, you can see the current edition of the newsletter, as well as my rating on the sort of the main ETFs that I like to follow, recent activity, and back issues of the newsletter, as well as recent comments that I've made on feature stocks. So something to check out for sure if you are a subscriber to the Tradescores Alerts and Analysis product. I'm going to go over to the Chart Watch tool now, where we can look at charts. One of the things that you can do in here is create a watch list for yourself, and you can group them. I have created a watch list called the Market Minutes watch list, which is essentially the charts that I want to look at in this video this week, as I always do. You can see here a table of those charts. Now, of course, the Canadian markets were closed today, and that's why you see zero values for the Canadian indexes. However, we're going to scroll through all of the charts in a slideshow by clicking on the little slideshow button here, and it will bring us up charts of the important indexes that I like to follow, starting off with the Dow 30 ETF. And the story here is pretty simple. The upward trend is in place. The buyers are in control. We had a little stumble a few days ago, but that really just better defined the upward trend line, and we can now draw a line across the bottoms here, and this market looks like it will continue to rally until it hits resistance, which is not too far away, but we have another maybe 1.5% to 2% of upside from here, and I would suggest that you stay long stocks and you look to be a buyer of stocks based on what we see with these patterns. All right, next chart, we just click on the little next button and it brings up the Emerging Markets ETF, and here you can see that we have nice upward momentum as well, but unlike the Dow, this index is not hitting resistance. Now, all of these markets are overdue for a little bit of a profit-taking pullback, but until the upward trend line is broken, you don't really need to worry about that. So what you want to do if you are long any of these things is wait for a break of the upward trend line. At that time, you can get a little bit more pessimistic or a little bit more cautious, but until that happens, I would stay long the emerging markets. Moving right along, this next one is the Canadian Dollar ETF, and for those of you in Canada looking to perhaps change some money into the US dollar, I would advise against it right now because the Canadian dollar is strong and outperforming the US dollar right now. We've just broken through some resistance, and so we're now likely to head up towards par value on the US dollar, which is, of course, $1 US equals $1 Canadian. It's been a little while since that has been the case. Once we get there, I expect that the market will get stuck and probably pull back a little bit, but in the meantime, I would stay long the Canadian dollar. Next chart is coming up here. This is the chart of gold. Gold is starting to get parabolic. What I mean by that is the trend is getting steeper with time, and that is a bit worrisome because it means that the buyers of gold are getting emotional. Anytime you get emotional buying, you typically get a pullback, and what tends to happen is you'll pull back to the trend line. So we can draw the trend line like that, and we're overdue for a little bounce back to the trend line. That could happen in the near term. No real sign of it yet. We had a little bit of weakness late last week, but that didn't really materialize into some strong selling. But I do suggest some caution with gold and with gold stocks, simply because there does seem to be some emotion in the market. However, the long-term trend remains up, and it's going to take a lot for that long-term trend to be broken. Just realize that we are quite a ways away from that long-term trend line. All right, moving right along. This is a chart of the Canadian venture market, which is heavily weighted in mining stocks, gold stocks, junior energy companies, and you can see that this market has gone straight up. That's largely because of the strength in commodity markets. No sign of weakness there yet. I would stay long these stocks. There's some great action in them. The problem, of course, is that they tend to lack liquidity and can be a little bit difficult to move in and out of. So you really have to be more of a retail trader, moving in and out of relatively small positions to trade those markets. This is the chart of oil and gas, or probably just really oil, and it is coming into some resistance right here. It had a pretty good run over the last couple of weeks, and it's getting stuck where we would expect it to get stuck. I expect that we'll kind of wind our way sideways here for a little bit, but ultimately we should be able to break out through that price level and move up toward the next level of resistance. So long term I am bullish, but expect some selling pressure in the short term in the energy space. Nasdaq 100 looks much like the Dow chart, rallying very well over the last month and a half or so, but now coming into resistance where it'll probably stall. So the party's not over yet, but certainly it's getting late, and the party may soon see some selling pressure here because the market has gone up so much and we're now rallying into some fairly significant resistance. And I think we have a couple more charts to go through. This is the S&P 500. It's got quite a bit more upside to resistance than the Dow and the Nasdaq. And of course, being a broader group of stocks, there's going to be some sectors that have lagged the large cap stocks and the technology stocks. And we may get some sector rotation out of the leading sectors, which have led the way over the last little while, and into some of the lagging sectors. And I suspect that some money may come into the financial stocks. They have been a laggard of late. But generally speaking, this trend is up, remains up, and there's no reason to sell the market today. I would stick with that trend until, as I've said before, until that upward trend line gets broken with a sharp downward move. That's when you want to take some more caution into the market. TSX 60 is just breaking through some resistance. This market's been in the trading range for a long time and is now getting the benefit of a sort of expansion of strength outside of the commodity-based sectors. We're starting to see the financial stocks pick up in Canada. And of course, the energy market has picked up, which has really lagged the gold and the mining sector in the last little while. And so I like the looks of the Canadian market here. I think it's more likely to go higher than lower in the near term. Treasury bond index, I like to follow this because this is really the fear trade. People tend to pile into U.S. Treasuries when they're feeling nervous. And what we can see now is that we've had this pennant pattern forming over the last little while. Now, if we get a break down from the pennant, then the story's over on the fear trade. If we get a break out on the pennant, then the fear trade is back on. And what you want to watch for is what way we break from this pennant as a little bit of a clue to tell you where money is going. Now, if you think about the equity indexes and how they are rallying into resistance and how we should expect some selling pressure to come out, what may happen is we have a few more up days into that resistance, then we get some selling pressure, and that'll cause some money to come out of equities back into Treasuries for a little bit of a rally. I don't think it's a significant trade to make, but something to watch as an indicator of where people's mindset is. U.S. dollar has been plummeting, and we all know that, but it is showing some signs in a little bit of recent trading that it's starting to bottom out here. It's kind of interesting how the market starting to rally a little bit and break this very short-term downward trend line. I expect that we'll probably get a little bit of a bounce back in the U.S. dollar. That will coincide with some selling pressure in equities, some selling pressure in gold, but I wouldn't call it ready yet. And even if we do get a little bit of a rally, maybe it comes up into this trend line here, longer term I think we're headed lower on the U.S. dollar. What would negate that, I suppose, is if we could break this, come up into here like this and then break to the upside through that long-term downward trend line, and that would indicate that the U.S. economy, the U.S. Federal Reserve is going to stop printing money and people will start to buy the U.S. dollar yet again. Well, that has been the Tradescores market analysis for this week. I hope that you've enjoyed it. Have a great week in the market and trade well.